For companies who stock products brought in from overseas, there is a common requirement to record landed costs. Landed costs are those costs that are in addition to the ex-works cost of the product as billed by the product supplier. Business One incorporates robust landed cost functionality that allows the recording of estimated or actual costs in detail against previously received product. In addition, there is support for recalculation of the gross profit of documents that or sales documents that were issued prior to knowing what the revised cost of the product would be, including its landed cost. So in the scenario where a product was received at X dollars and a sales document was created for shipment of some of that product, also with a cost of X dollars, at some point later, landed costs may have been entered into the system based upon estimated or actual landed cost. However, the landed cost would have affected the inventory that is still on hand, and the difference would have posted to some form of cost variance account because part of that inventory is no longer there. To recapture the impact of that new known cost, Business One will allow us to recalculate the cost and related gross profit on the sales documents that were generated prior to knowing the landed cost, and will make the appropriate journal entry to move certain costs from a cost variance account into the cost of sales account. I'm going to demonstrate this showing a number of documents that I've already created in the system that document this process flow. So to start off with, I'll pull up a purchase order that would have been created, let's say back in January. Given that this is an imported item, we expected that the item would be delivered about 2 months later in March. Okay, if I then drill into the related goods receipt that came in March 1st, we see that 2 cases of this product came in at $900 per case on March 1st. Okay. The next thing that happened was that there was actually a sale of some of this product. We'll show that. On March 2nd. So we received in 2 cases on March 1st, and then we sold 5 eaches of that same L123 item on March 2nd. And when we did that, we had a certain gross profit. And if we look at that, we can see that from the journal posting that the cost of goods sold was $375 on that document. Okay. Now, at some point later, we became aware of certain landed costs related to this product receipt. So if we go into the purchasing side of the house and take a look at landed costs, we went ahead and created a landed cost document when we knew about this on March 8th. So product was received on March 1st, and about a week later we entered the landed costs. And if we look at the costs, we were apprised of various costs for insurance, shipping, storage, etc. that added up to $1,000. And we wanted that $1,000 of additional landed costs to be capitalized to the inventory. Now, we had received, as stated, 2 cases of this product on March 1st, and we sold some of it off on March 2nd, and now on March 8th, we're entering the landed costs. So you'll see that the landed costs are actually calculated both on a unit basis and in total. So the unit landed cost that's being added is $500 per case for a total of $1,000 for 2 cases. However, if we look at the journal entry that got created from this landed cost adjustment, we will see that only part of those additional costs of $1,000 went to inventory. The balance went to a variance account. The reason for that is that not all of the product is still there. So we actually have 12 eaches per case. For 2 cases would be 24 eaches. So some of the product, again, a portion of the product was no longer on hand because it had been sold off on March 2nd. So on March 8th, we can only allocate out of the addition of $1,000 to the quantity of the product that is still on hand. Okay. So, given that, we can go ahead then and drill into the item itself. Actually, I take that back. Let's take a look at one of our reports. I'm going to show what's called a batch and serial inventory audit report, and I'm going to specify a particular batch. The one that we were just dealing with is called the landed batch for item L213 or L123, and we can see the movement of this item in terms of quantity and cost for a particular lot. Okay. And so what we see is that this lot tracked item, we received a total quantity of 24, that's 2 cases of 12, back on March 1st, and it had a total value of $1,800, $900 per case. So that gives us 24 eaches with $75 per each. On the next day, though, we sold on this against this invoice a quantity of 5 for a using a cost of sales of $375, which is in essence 5 times 75. So no change in the unit cost, but obviously a reduction in the total value of the inventory because we've sold off some of the inventory. A couple days later, on the 8th, we post our landed costs. So we indicated that we had total landed cost of $1,000. However, we see that only $796 hit inventory. And the primary reason is that we only have 19 out of the original 24 left. So if we do the math, the proportionate amount would be $796 versus $1,000 posted against the remaining inventory. What that ends up doing is not really affecting the quantity of the inventory. So our cumulative quantity went from 19 and stayed at 19. However, our cumulative value changed because we added additional landed cost to the value of the inventory, and our unit cost of the inventory went from $75 to $116. Given all of that, we basically had a sales document that went out with a unit cost of $75. Therefore, the gross profit on that document was theoretically overstated, and that might have an impact on certain reporting as well as items such as commission calculations, where a commission might be based upon the gross profit on a particular sale. So how do we go about recapturing that so that the gross profit on that document is correct? Well, we can actually use a process built into the system. Go there. In the sales area, we have something called a gross profit recalculation wizard. So we are going to go ahead and walk through this process. And right now we're just going to simulate it. And we can go ahead and specify certain items if we want to limit what we're calculating. But I'm just going to do that particular lot track item to follow our example. So we can see there's one item in our list. Go ahead and grab that. And next, the system's going to look for any applicable transactions that used that particular product. So for item L123, the system found an invoice 1054 where there was a transaction during the time period that that may need to be adjusted. So we can see, as we stated before, that the cost of sales amount, cost of goods sold amount was $375 for that transaction. Okay, and again, it's for a quantity of 5, and so remember 5 times 75, that was our $375 versus sales of $750. So we had a healthy 50% gross profit, and we can see this is also being tracked down at the individual batch or lot, however you want to call it. Proceed to the next step, and the system's going to give us some recommendations. So at this point, the system is going in and it has determined that, again, if I expand this down even to the, if we look at this, we can see that the system sees that the current unit cost for that item is $548.65 versus the previous, $375. Okay, and so the gross profit is going to change, and we can see a cost of goods sold variance of $209. So, therefore, the cost of sales is going to move from $375 for those quantity 5 to $548. And again, just go next to. Actually, let's go ahead and select the items that we'd like to go ahead and process, and go next. And at this point in time, we have a chance to change the posting date, put some journal references in. Okay, and what we see is the system is now coming up with the desired journal entry. And so again, what's happening is we're going to create a journal entry for $209.65. You're going to hit a cost of sales account and a price difference account. These are the internal keys for those accounts. Okay. Okay, so we'll save the simulation and exit. Okay. Again, this was just a simulation. Now, if I wanted to actually calculate that again, here's that previous simulation, but this time I want to go ahead and actually run it. So I'm not going to change anything here, just going to run it. Okay. Now, we can see that we have gone ahead and recalculated the gross profit.